proceeding us today, my husband and I would like to ask you for advice whether we should buy or sell our KT&G stocks. And before that, we did some research and would like to show you what we thought.
So when we were analyzing the tobacco industry, true, we found that it's still profitable, but the consumption is shifting from high-income countries to low and middle-income countries. And moreover, because this industry is really deadly, most of the government are tightening rules on the market. So for example, in Korea, last year we saw an increase in the price by 2,000 won, and now companies have to put on the package health image warning. So we believe that the market will really fluctuate. According to the on the ginseng market, we don't think that there will be something changed, only that the market will keep growing. The only concern is on the real estate market, because we saw that it's still suffering from 2008 crisis. And for example, this quarter, the rental value went down by 2%. So we were wondering what we should do for this company, if we should buy stock or not.
Okay, so of course we did some research about the company too. Korea Tomorrow and Global was privatized in 2002, changing from a monopoly in the areas of tobacco and ginseng to now having to compete against global leaders such as Philip Morris International, British American Tobacco, and Japan Tobacco. KT&G and its affiliated companies are active in 4 business areas that my husband already addressed, such as tobacco taking up 65%, followed by ginseng 23%, and real estate 8%. It is currently rated A- by S&P, and it enjoys a market share of about 60%. Looking at its financial ratios, we can note that its liquidity ratios are especially high compared to its competitors, which might indicate that they have a lot of cash at hand, which they could rather reinvest. Also looking at net profit margin and return on capital, we can see that it performs much better than Japan Tobacco and also better than British American Tobacco. And if we look at current news, we can see that KT&G has a problem with its shrinking market, as there are a lot of anti-smoking measures by the Korean government, and also there has been an end to its monopoly supply in the military. And for that, KT&G is addressing new markets such as the US or Africa. Also, it has noted that it wants to enter the Chinese market when the trade barriers are lower. It would be great if you can help us whether we should buy or sell our stocks.
Yeah, sure. See
Thank
you in
so
2
much.
days.
Yeah, see you.
See you.
Good morning, Mrs. and Mr. Avi. My name is Quentin, and I will present you the result of our analysis on KT&G stock. First of all, we will start with the DCF valuation, then we will see the relative valuation, and after we will conclude. About DCF valuation, we believe that KT&G will follow a double-stage growth models. The company will grow faster in the first period, around 5.6%, and after they will follow a growth rate long-term of 3%. Regarding the figure of the company, we expected a growth of free cash flow around 4%. That will lead us to a market value of equity around 19,000 billion. If we take a look at our sensitivity analysis now, you have to be aware that earnings can change due to unexpected fluctuation on the economic situation. This is why you can find pessimistic and optimistic price. So no worries if you find pessimistic price lower than current price, because you can also see that our expected price and our optimistic price are much higher than the current price. This is why we think that it's better to buy this stock. And Valentine will follow the presentation.
Good morning, Mrs. and Mr. Avi. To respond to your preoccupation about the decrease in Korean market expected in the next years, I want to show you that KT&G has some good strategy to solve these problems. We think that KT&G plan to accelerate the development in the foreign markets. So, for example, where? We think that in Europe there's a lot of possibility, because Europe represents just around 14% of overseas sales. And then, as we know, they plan to accentuate the implementation in Africa and Middle East. so as during the past year. How they can do that? They can start by increase the reinvestment ratio. We know that in 2015, this ratio is just around 33%, and the goal is to reach 50% for the next 5 years. After that, they can also use the leverage ratio, because the debt on equity ratio is only around 14%, so they can borrow more to financial institutions. And with this money borrow, they can open a lot of facilities in the countries targeted to distribute more easily. The consequences of this choice, it could reduce the cost of capital with a cost of debt greatly lower than the cost of equity. And after, it can also increase the expected growth rate during the high period, I mean the 5 next years, as Quentin explained before. Why it's possible to do this strategy? First, the return on capital is really more important than the cost. It's really less important, than the return on capital. After that, the same technology can be used in each country, so it could reduce the costs and increasing the operating margin. And last, the cost of debt is really low, less than 2%, so KT&G can borrow and reduce the cost of capital. As you can see, if we choose to reach 50% for the reinvestment ratio, the growth rate expected can reach 8.3%, and as you can see after, the value per share is going to be 164,000 won. So then the final expected result, assuming that the stable growth of 3% present before stay the same after 2020, and still using the FCFF model, doing our success strategy will increase the value by 16.3%. So with this strategy, we can reach a price, as I said before, 164,000 won. Thanks for your attention.
So in Korea, KT&G is monopolizing the tobacco industry, so it is very difficult to find comparable companies in the local market. We focus on the fact that tobacco is an item of personal preference. For this reason, we chose 3 liquor companies in Korea. Those are Haitsu-Jinro, Lotte-Chilsong, and Muhak. Haitsu-Jinro and Lotte-Chilsong are 2 companies that have largest market share in liquor industry, and Muhak is ranked 3rd in soju market. Also, one of the most important categories to consider when deciding comparable firms is the industry type. Therefore, we chose 6 foreign tobacco companies that sell their products in Korea. Those are Philip Morris, British American Tobacco, Japan Tobacco, HM Sampo Erna, Altria, and Imperial. Together, we selected 9 comparable companies. The next step is selecting a multiple. We conducted regression tests using PE ratio, EV divided by EBITDA, price to book, price to sales, and value to sales ratio. To decide one multiple, we consider R-squared value as well as multiple determining variables.
Among those multiples, PE and EV to EBITDA have comparably low R-squared value, which is about 0.1. And price to sales and price to book value were considered less suitable based on determining variables shown before. Thus, by the point that our companies have different leverages and tobacco industry is a retail industry which have an importance in operating margin, we chose EV to sales. R-squared value of it is 0.5, which is highest among the ratios. Looking at the chart, the red dot represents KT&G. In the graph, KT&G is placed just below the standard error line, meaning it is slightly undervalued. As a conclusion, we recommend to buy KT&G. The stock price of KT&G on June 10 was 127,000. However, according to DCF, the fair price should be 141,000, and relative valuation also shows it is undervalued. So our target price is 141,000, and upside potential is 11.2%. Thank you.